So I wanted to talk to you about something that causes more confusion than roadworks in Birmingham, and that's credit reports. More importantly, how lenders read them. Because I can absolutely promise you that they don't read them the same way you do. And let's start with the biggest myth of all, that score you see in the app. It's absolute rubbish. It's a feel-good factor. Lenders don't use it. ClearScore, Experian, Equifax, they all give you one of those scores, all the apps do. And it usually goes alongside a red, amber, green type traffic light indicator or graph or whatever. It's about as much use as the like button on Facebook. It might give you a nice feeling if there's a big score and it shows green, but it doesn't actually tell the lender anything meaningful. They don't use it. What lenders do use is the actual data behind the score. So here in the UK, there's basically 3 credit reference agencies: Experian, Equifax and TransUnion. All the credit scoring apps pull their data from one of these 3 agencies or more. And it's the same with lenders. Different lenders use different agencies. Some of them use 2, some of them use all 3. So deciding which one you want to follow is like trying to pick your favourite kid. Completely impossible. And if you really want to take a detailed look at your credit score, you need to check all 3. So what do lenders actually look at? Well, this is the really important bit. Once you make a mortgage application, it goes through a process called underwriting. And it's the underwriters that pull and look at your credit file. So let's take a proper look at what it is they're looking for. Firstly, it's your payment history. And this is the big one. Are you making all your payments on time? If you look at your report and see anything with a 1, 2 or 3 in the status column, that's missed payments. And if you've got a few late payments from a few years ago, doesn't really matter. If you've got recent missed payments, then lenders are going to start to twitch. They're going to want to know why. And then there's credit utilisation. This is all about how much of your available credit you are actually using. So if you've got a 10k available balance on your credit card and you're using £9,950 of it, then that tells the lender that you're living close to the edge of the 1970s rock star. And it's not a good sign. They really don't want to see big balances sitting on credit cards. And they really don't want to see you anywhere near your actual credit limits. And then there's the obvious stuff, defaults and CCJs. These are massive red flags to lenders and they're a key thing that underwriters look for. A default is basically a lender's way of saying, they didn't pay, we gave up trying to make them. But a CCJ, on the other hand, is actually the court saying, they didn't pay and now we're going to make them. These are absolute red flags to some lenders. Not all of them, but some. And then there's some of the stuff you might not have thought of. Things like the electoral roll. The electoral roll is a key item of information for underwriters. And being registered to vote at your current address will win you some major brownie points. It shows identity and it shows stability. And then there's length of credit history. Now, there's a lot of myths that go around about you should always have a credit card to make sure that you've got history. But lenders don't like to see thin files. If you've only ever had credit for the last 6 months, then how can an underwriter look at your file and see a pattern of you making payments on time? They can't. It's like binge watching a box set on Netflix but only getting to episode 1. None of the really interesting stuff's in there. And then there's hard credit searches. Too many hard searches on your file and it looks like you're trying to apply for credit everywhere. And lenders are going to treat that as if you've gone speed dating with their money. They're going to want to know, why are you talking to so many lenders? What are you up to? Why are you applying for so much credit? And then there's the last one, and this one most people miss. Financial association. If you ever have a joint account or take out a loan in dual names, you and your partner for instance, then you become permanently financially linked. And if they've got bad credit habits, it's going to reflect badly on you as well. It's really worth a check on your file to see if there's any financial associations that you didn't know about. And choose your financial partners wisely. Apply the same level of caution, if not more, than you would to, say, giving out your Wi-Fi or your Netflix passwords. So that's the main things they look at. But how does all that information really affect you? Let's take a quick look at affordability versus credit score. And this is something a lot of people don't realise. You can have great credit and still fail a mortgage application. And you can have bad credit and still get accepted by the right lender. Your credit file tells the lender about your behaviour. Affordability checks tell the lender whether you can actually repay the mortgage or not. And they both matter, but a perfect credit score will never ever override affordability. Affordability wins every time. Now, when you do actually start looking to apply for a mortgage, for most lenders, when you get an agreement in principle, it's only a soft search. So that will not leave a footprint on your credit file. But I did say most. Whereas full mortgage applications use a hard search, and that does show up on your file. And one or two hard searches, that's not going to ruin your life. But whatever you do, don't start collecting them like Pokemon cards, because that kind of behaviour sticks out like a sore thumb. So what should you actually do if you want to get mortgage ready and you've got 6 months to run at it? Well, first of all, start by checking your credit report. You can get a 14-day free trial at CheckMyFile. There's a link in my bio if you want to do that. But ideally, you need to be checking all 3 reports, and you need to check them in detail. Make sure your address matches up across everything: your credit card, your bank statements, the electoral roll, your driving licence. Getting all that stuff matched up, it shows stability, and it makes it really easy to prove your ID. Keep your credit utilisation down. Don't max out your credit cards. Try and minimise any unnecessary spending. We've said it before and we'll say it again. Get yourself on the electoral roll if you're not already there. And basically just avoid applying for any new credit unless you absolutely have to. And certainly once you've got a mortgage application in process, do not apply for anything that involves credit unless you've spoken to your broker first. And speak to a broker, one that really knows what each lender wants and how to present your case best to them. Every lender has a different set of criteria and a different set of rules. It's not as simple as just applying. Oh, and by the way, I might just know a guy. His link's in the bio. So if you want me to take a run through your reports, decode them, tell you what the lenders are going to see, then drop me a message or hit the link tree in my bio and get in touch. Thanks for watching. Please give this video a like. And if you want to see more videos like this, then hit the follow or subscribe for more mortgage insights with a slight hint of humour. See you soon.